Joining us today are the Office of the Auditor General of Canada and the Office of the Comptroller General, respectively. I will ask everyone to introduce themselves, starting with the Auditor General's office. So go ahead, please.
Good morning, Madam Chair, and thank you very much for the opportunity to be here today. My name is Sophie Meller, and I'm the Assistant Auditor General responsible for overseeing the audit of the consolidated financial statements of the Government of the Northwest Territories. I'll pass it over to my colleague, Mr. Irving.
Thank you, Sophie. Good morning, everyone. Thank you, Madam Chair. My name is David Irving. I am the principal responsible for the 2020 Public Accounts Audit, and I am based out of Edmonton. And I will pass it on to Kelsey Hall.
Thank you, David, and thank you, Madam Chair. My name is Kelsey Hogg. I'm a director in the Edmonton office, and I was assigned to the audit of the consolidated statements for fiscal 2020. I'll now pass it off to Lana Dar.
Thank you, and good morning, everyone. Thank you, Madam Chair, for allowing us the opportunity to be with the committee this morning. My name is Lana Dar. I'm a principal with the Office of the Auditor General of Canada. I'm based in Vancouver, and my responsibility related to the government's consolidated financial statements is for the audit of the 2021 current year.
Thank you. You also have to introduce your observer. Is she available today?
Madam Chair, I don't believe she's participating.
Thank you. I will now ask the Office of the Comptroller General to introduce themselves. Go ahead, Julie.
Good morning, Madam Chair. Thank you for having us with committee today. My name is Julie Moychin, and I'm the Comptroller General with the Department of Finance.
Good morning, everyone. My name is Siobhan Emily. I'm the Assistant Comptroller General with the Government of the Northwest Territories, Department of Finance. I'll turn it over to Tegwin.
Good morning. My name is Tegwin Jones. I'm the Assistant Director for the Reporting, Treasury, and Risk Management Division at the Department of Finance. Walter?
Thank you, Tegwin, and good morning. Thank you, Madam Chair. My name is Walter Mpedzisqua. I'm the Manager Financial Reporting with the Department of Finance. Thank you.
So welcome to all of you, and thank you for being here. I will now ask the Standing Committee to introduce themselves, starting with my left, please.
Thank you, Madam Chair. My name is Caitlin Cleveland, and I serve the people of Cam Lake.
Rylan Johnson, I'm the MLA for Yellowknife North.
Kevin O'Reilly, Frame Lake.
Lisa Semler, MLA for Nuvik Twin Lakes.
Ron?
Ron Bonnetrus, MLA Detchel.
Okay. We also have with us our committee clerk.
Cynthia James, Committee Clerk.
Nigel Woodridge, Senior Researcher.
James Thomas, Committee Intern.
And Stephen Dunbar, Committee Advisor.
Stephen, I keep on forgetting you. You're supposed to be in the room. I am Frida Marcellus, MLA for Tabacha and the Chair of the Standing Committee on Government Operations. The Standing Committee on Government Operations has a mandate to review the public accounts of the Government of the Northwest Territories. The purpose of today's public meeting is to review the Government of the Northwest Territories public accounts for 2019-2020. The members of this committee take the responsibility of examining the financial accounts of the Government of the Northwest Territories very seriously. The committee is committed to the practice of holding a public review of the accounts annually so that the Government of the Northwest Territories spending issues are publicly examined and all relevant information is placed before the public. I would encourage those of you who are interested in reviewing the public accounts for 2019-2020 to refer to the online versions which are available on the Legislative Assembly's website and on the Department of Finance website. I will also ask Ms. Miller, Assistant Auditor General, to begin with her opening comments that she wishes to make.
Thank you, Madam Chair. So thank you for this opportunity to discuss our audit of the consolidated financial statements of the Government of the Northwest Territories for the 2019-2020 fiscal year. I'm accompanied today by David Irving, who was the principal responsible for the audit, Kelsey Hogg, who was the director, and Lana Dar, who is the principal responsible for the audit for the 2020-2021 fiscal year. Our primary responsibility as auditor for the Government of the Northwest Territories is to audit the government's consolidated financial statements and express an opinion on them. As legislative auditors, we also report on the government's compliance with specified authorities. The consolidated financial statements within the Northwest Territories public accounts are a key government accountability document that can help Legislative Assembly members understand the results of the government's financial transactions. Therefore, our audit of the consolidated financial statements supports the Legislative Assembly's oversight of the government, promotes transparency, and encourages good financial management. The committee's review of the public accounts is an important step in ensuring accountability for how public funds are spent and how government finances are reported. I'm pleased that the committee is holding this hearing to examine the government's financial results. The government carries out its accounting and financial reporting responsibilities through its Office of the Comptroller General with the Department of Finance. The Comptroller General will answer questions about the preparation of the financial statements. We will focus on our audit. Our independent auditor's report is on pages 1 to 4 of Part 1 of the public accounts. We have issued an unmodified audit opinion on the consolidated financial statements. They conform in all material respects with Canadian public sector accounting standards, which means that the information in the statements is reliable. The consolidated financial statements, which include the accounts of the government and its controlled entities, show that the government had a net debt of $1.3 billion as at March 31st, 2020. Net debt is the amount by which the government's liabilities exceed its financial assets. It's a key financial indicator. Capital projects funded by the government have contributed significantly to the growth of the net debt. The government makes estimates and assumptions that affect the amounts reported in the financial statements. The COVID-19 pandemic emerged and evolved during the 2019-2020 fiscal year. We assessed its effects and reviewed areas that are more sensitive to accounting estimates and market fluctuations. Overall, the pandemic did not significantly affect the consolidated financial statements. I want to note that as a result of the pandemic, the majority of the audit was completed while our auditors were working remotely. We adapted our approach and maintained good communication with the government departments and territorial corporations. We have built a successful and collaborative relationship with these organizations and trust it will continue. I would like to thank the Comptroller General, the Deputy Minister of Finance, and the staff of the departments and territorial corporations who were involved in preparing the government's consolidated financial statements. We appreciate the efforts, cooperation, and help of all involved, especially given the pressures created by the pandemic. Madam Chair, This concludes my opening remarks, and we would be happy and pleased to answer the committee's questions.
Thank you, Ms. Miller. We're going to keep the questions for the end. Okay, so we're not going to take questions at this time. I will now ask the Comptroller General, Ms. Muchin, to proceed with the opening comments and the presentation.
Good morning, and thank you for inviting us before the committee to discuss the 2020 public accounts of the Government of the Northwest Territories. With me today in person and on the phone from the Department of Finance is Ms. Siobhan Emilier, Assistant Comptroller General, Ms. Taegwin Jones, Assistant Director of Reporting, Treasury and Risk Management, and Mr. Walter Mupedziswa, Manager of Financial Reporting. The public accounts is the key accountability and transparency reporting mechanism of the GNWT and presents the financial position and the results of operations of the consolidated government reporting entity for the fiscal year. Before getting into the details of the 2020 public accounts, I'd like to highlight a few general items that will help frame and contextualize the report. First, the public accounts show what has already happened. They cover April 1, 2019 to March 31, 2020. Importantly, this means the results largely predate the COVID-19 pandemic. The information and analysis we present today is historical, but the objective is to be accountable for the financial results of the government and to inform our future decisions. Second, the consolidated public accounts are audited by the Office of the Auditor General of Canada. The auditor's report again this year provides a positive, clean opinion, and this means we have a high degree of confidence in the accuracy and reliability of this reporting. Finally, the public accounts are presented alongside notes and schedules. The objective is to make our reporting more transparent, easier to understand, and easier to use by the public. We continue to try to improve the transparency and understandability of the public accounts year over year and appreciate Standing Committee's feedback in that regard. Now on to the high-level summary. The 2020 consolidated public accounts include an operating deficit of $77 million. Revenues were $2.12 billion and expenses were $2.2 billion. During the year, the GNWT invested $270 million into capital infrastructure. The consolidated cash position decreased by $25 million to $85 million, and the GNWT has $470 million in short-term loans on March 31, 2020, which is an increase of $137 million over the prior year. Overall borrowing, as defined by the NWT Borrowing Act, was $1.13 billion, which resulted in the government's residual borrowing capacity being $167 million at March 31, 2020, when the borrowing limit was $1.3 billion. The GNWT continues to have limited flexibility to raise financial resources and has vulnerabilities related to revenue sources. In short, the GNWT requires careful fiscal management. While the COVID-19 pandemic had only a small impact on the 2019-20 actuals, the work of preparing the statements happened during a time when there was significant change, pressures, and uncertainty. I want to thank the finance teams from every GNWT department and agency for their contributions to the on-time completion of these financial statements and for their extra efforts to work through new and different challenges. That concludes my opening comments. At this time, if committee agrees, I'd like to go through a short presentation to provide some detail on the financial highlights. Thank you.
Go ahead with your presentation, please, Julie.
Thank you. What I would like to walk you through today is the public accounts timing for 2019-20, financial highlights, significant notes to the financial statements, some of the challenges, as well as a short discussion on some upcoming changes to public sector accounting standards. Finally, I will provide an update on the audit currently underway. On slide 4, there are a number of key milestones for the public accounts each year. And while the Financial Administration Act requires that the interim financial report be completed by September 30th, we do strive to complete and provide a copy to committee on or around August 31st. This is to ensure that committee has the information they require in time to assist with the review of business plans. What we'd like to highlight here is that in 2019-20, the statutory requirements for completing and publishing the consolidated public accounts were met. On slide 6, we have presented the key financial highlights from 2019-20 and how they compare to the results from 2018-19. And we will go into more detail on the next few slides. On slide 7, the 2019-20 consolidated financial statement reports an actual annual operating deficit of $77.32 million, which is $152.65 million lower than budget. This is due to lower revenues and higher expenses. Revenues are lower than budget primarily due to lower transfer payments, non-renewable resource revenues, and corporate and personal income taxes. Revenues are higher than the previous year due to an increase in the territorial formula financing grant from Canada. Expenses are 3.3% higher than the original budget. The increase from the original budget was due to higher health costs due to more than anticipated hospital and physician services provided to NWT residents outside the NWT, and an increase in operations as a result of infrastructure costs like furniture that were operations expenditures and not deemed as capital. An increase in operation expenditure due to operating the new Stanton Hospital. In addition, there were higher education expenses for higher demand for income assistance program. It is important to note here that the budget is the main estimates and does not include supplementary appropriations that were approved during the year, as this presentation is the requirement under public sector accounting standards. These supplementary appropriations are approved by the Legislative Assembly. I'd also like to add that expenses are 8.2% higher than the previous year as a result of higher education, general government, and health and social service expenses. These include full operation of the new Stanton Territorial Hospital, as well as other health and social service program spend increases. There was an increase in grants and contributions due to the new carbon tax offset grant. This has also generated higher revenue and collective agreement increases. Additionally, there was higher demand for the income assistance program. On slide 8 are financial assets and liabilities. Financial assets increased to $539.81 million, primarily as a result of increased portfolio investments, sinking fund balance, and amounts due to Canada at year-end accounted for the overall increase. Liabilities increased to $1.85 billion. The most notable changes were an increase in liabilities under public-private partnerships, increase in amounts due to Canada, and an increase in short-term borrowing based on cash needs. On slide 9, non-financial assets and net debt. Non-financial assets are primarily made up of tangible capital assets, which is $3.57 billion, that are used to provide services to the public. And Schedule A of the Public Accounts Section 1 provides a summary of tangible capital assets. The increase in non-financial assets was primarily due to $269.63 million spent on the acquisition of tangible capital assets. The government is in a net debt position of $1.31 billion. Net debt increased by $186.38 million during the 2019-20 fiscal year due to debt that was incurred to finance P3 liabilities and the increase in short-term borrowing. On slide 11, we wanted to highlight some significant notes to the financial statements. The notes to the public accounts form an important part of the overall document. These notes provide additional detail on line items in the statements. And we wanted to highlight for you today some of the key notes. Note 2 describes for the reader various elements within the financial statements, including definition of certain terms and description of key areas where management has made certain choices as to methods used to measure transactions. It is a significant note that provides context and clarity for the reader. Note 13 provides more details of liabilities under P3. Year-end balances for all P3s are disclosed in this note. The note also provides the breakdown of payments made and summarizes the details of each agreement. Liabilities for P3s increased by $38 million. This is a direct result of expenses incurred by P3 for the Talicho All-Season Road, offset by payments made towards Stanton Renewal and the Mackenzie Valley Fiber Link. Note 17 provides details on contractual obligations, which are future commitments that the government has agreed to by year-end. This represents payments that the government is expected to make in future years for services contracted. In addition, a summary is also provided for all receipts of revenues that the government is contractually entitled to after the fiscal year end. Note 19 shows a detail for certain categories of revenues Other than tax revenues, all other revenues have increased from the prior year. The decrease in taxation is a direct result of clawbacks on prior year's corporate tax returns. Carbon tax was a new revenue stream for the government in 2019-20. Note 21 lists departments where their expenditure exceeded their appropriation at year-end. In this fiscal year, one department overspent. The Legislative Assembly overspent by $23,000 due to expanded language services provided to members of the public as a result of implementing recommendations of the Northwest Territories Language Commissioner. The overexpenditure was deemed as a supplementary appropriation by the Comptroller General for the fiscal year in accordance with Section 77 of the Financial Administration Act. Note 22 lists events that have occurred after year-end but before the audit was completed that are expected to have an impact on the government's financial statements, and they are disclosed in this note. There were 3 subsequent events that took place in this fiscal year: the COVID-19 pandemic, the increase to the government's borrowing limit by $500 million to $1.8 billion, and the issuing of $180 million in bonds. On slide 13, we list some of the 2019-20 public account challenges. The audit of the consolidated public accounts is complex. The work begins prior to March 31 and continues over 6 months after in any given year. The completion of the public accounts includes the consolidation of financial statements and entries for GNWT departments, 23 entities, revolving funds, and special purpose funds. As a result of COVID-19, more public agencies than usual requested extensions to complete their financial statements. The transition to working from home was challenging. However, the year-end audit still progressed well. In fact, departments requested a short extension and were all able to meet the deadlines. The OAG also worked remotely during this time. The public accounts, as mentioned before, was completed within the legislated timeframes. And I mentioned in my opening remarks, but I want to thank finance teams across government for their help, for their efforts to complete these statements on time, given all the impacts. Now on to a discussion on future standard changes. There are 2 that we wanted to highlight. In January, we spoke to committee about PS 3280, asset retirement obligations, which is a future standard change. Although it is not effective until 22-23, we anticipate that it will have a significant impact on the GNWT, and we are currently working through that assessment, and we will share this information with committee. The standard refers to the legal obligation associated with the retirement of a tangible capital asset. Costs that would be in scope would include solid waste, landfill closure, and post-closure liabilities, removal of asbestos and retirement of hospital equipment, such as x-ray machines. The cost to retire would be added to the cost of the asset and amortized over the useful life. Another standard coming into effect for 23-24 is a standard for P3. This standard provides guidance on how to account for and disclose public-private partnerships. We have been applying the initial guidance for the standard, and so we anticipate there will not be a significant impact on the GNWT. Currently, the GNWT has 3 P3s included in the financial statements. Additionally, we have reviewed the Stanton Legacy Building Refurbishment Project to see if it met the criteria to be accounted and reported as a P3, and we concluded that it did not, based primarily on the analysis of risk transfer, and concluded that the GNWT is bearing the majority of the financial risk and is therefore being accounted and reported as a regular infrastructure project. Finally, we'd like to have a quick discussion around the 2020-2021 audit. The audit is in progress. Currently, the GNWT anticipates no issues meeting the timelines. The Office of the Comptroller General is committed to working with committee on addressing concerns and recommendations. Thank you for your time, and that concludes my presentation.
Thank you for your presentation. So we will start with questions from committee. Who wants to start? No, she's not giving a present. She already gave her presentation. Nope. That's not done for today. Well, we're going to go with the Comptroller General first, and then we'll go with the Auditor General in the closing. So do you want to ask a question? Okay, MLA Cleveland.
Thank you very much, Madam Chair.
My first question is actually for the Comptroller General and the Auditor General. And my first question is just in regards to P3s and specifically Stanton Legacy Building. And I'm wondering if both the Auditor General and the Comptroller General can discuss whether or not, or why not, they feel the Legacy Building should or should not be considered a P3. Thank you.
Ms. Muchin, do you want to answer first, please?
Thank you, Madam Chair. Yes, as I mentioned before, primarily, so when we look at the standard, we review the criteria within the standard to determine whether this arrangement would be, classified as a P3. And we determined that it did not, based primarily on the fact that the GNWT is bearing the financial risk for this project. And so while we have not accounted for it as a P3, it is still included in the financial statements, and the future contractual obligations related to this project are disclosed in the appropriate note. Thank you, Madam Chair.
Thank you. Follow-up, Emily Cleveland?
Yeah, and I can come back for the Auditor General's response to that after, but I guess my second question for the Comptroller General is, given that our expenses, especially during a COVID year, continue to increase in the year we've just had, and our revenues have continued to go down, does Comptroller General feel that the GNWT will likely require another debt limit increase in the life of this assembly? Thank you.
Ms. Muchin?
Thank you, Madam Chair. What I'm presenting to you today are the actuals, and so my responsibility are to provide accurate and reliable reporting on the public accounts, and these results are included in future fiscal policy decisions. And so really I'm unable to comment on future policy decisions. However, these actuals form part of that discussion. Thank you, Madam Chair.
Maybe the Auditor General would like to answer that first question of Ms. Cleveland, please.
Thank you, Madam Chair. This one is an interesting issue. When we're talking about the Stanton Legacy project, it is a very complex project, and to be frank, our analysis, when we looked at it, did indicate it was a B3, and we understand the Comptroller General's analysis indicated it wasn't. From our perspective, the government owns this building, and initially they hired a contractor to help finance and oversee renovations, find tenants for the building, and then, of course, operate and maintain this for several years. Subsequently, the government decided to lease this building back, use it for long-term health care, pay the majority of the renovations themselves, because they figured that would be more cost-effective. So as a result, the contractor has contributed a smaller amount to these renovations. But we are talking about a building that the government owns, is paying the majority of the renovations, and is leasing the building back from the contractor for the next 30 years, in addition to paying some of the O&M costs to the contractor over those 30 years. Now, this arrangement is quite interesting in that the government does have a profit sharing component to this arrangement. So that the government will receive 50% of the profits back after the contractor has incurred their expenses and received a yearly return of the contractor's invested capital. So from our perspective, we don't see this just as a regular lease. This is a more complex transaction, and the contractor has fundamentally contributed capital, even if it is a small amount. They are involved in the design work for this project. They are involved with the operation and maintenance of this project. So our analysis concluded that this was a P3 project. Now, to be fair, we did talk to the Comptroller General. The construction for this project is recorded in the TCAs. The contractual commitment is also included in Note 17 under contractual commitments. And there's a paragraph in Note 17 which discusses profit sharing arrangement. So from our perspective, when we looked at this, we said the current construction costs were not significant, were not material, concluded that financial statements were not materially misstated, but this is an area where we've agreed to disagree with Comptroller General at this point in time, but it's something that we'll monitor in the future. Thank you, Madam Chair.
Thank you. Are there any other questions? MLA Johnson?
Thank you. In regards to the new public accounting standards on retirement of asset retirement obligations, I heard that we will then have to amortize that. Can I just get a sense of when will that then go in the main estimates, and when would we expect to see that? Thank you, Madam Chair.
Thank you, Madam Chair. Yes, that estimate will be included in the main estimates, similar to how the environmental liability appropriation is listed. And so that will be included in the next main estimates process. Thank you, Madam Chair.
Follow up, MLA Johnson?
Thank you, Madam Chair. And so, can I just get a little more explanation of how the standard applies? So environmental liabilities are recorded as, an overall liability, and then we can go in and view them by project. But the way we amortize other capital assets is by individual tangible capital asset, and we can see that. Would this then get wrapped up in that amortization number, or is this strictly going to live with environmental liabilities? Hope that's a clear question. I'm trying to understand the standard. Thank you, Madam Chair.
Go ahead, Ms. Muchin.
Thank you, Madam Chair. I'm going to have the Assistant Comptroller General answer that question. Thank you.
And Ms. Siobhan.
Thank you, Madam Chair. So actually with this particular standard, we're going to be looking at it separately. So it will not be embedded in the TCAs. It will not be embedded in environmental liabilities. It will be shown as its own category on the face of the financial statements. Transactions related with it as well will be disclosed separately. Thank you, Madam Chair.
Thank you. Follow up, MLA Johnson?
Yeah, I guess, can I just get a sense of how much money we're talking about? When I think of retiring all of our assets, are we in the billions of dollars, hundreds of millions? And perhaps can someone speak to some of the issues we are running into in quantifying this? I know that many of our landfills don't comply with their water licenses, don't have proper ways to dispose of hazardous waste. We struggle to remediate buildings and, deal with asbestos, let alone to do it properly and according to regulations. So, I'm just trying to get a sense of the scope of this liability that we're going to start recording. Thank you, Madam Chair.
Go ahead, Ms. Muchin.
Thank you, Madam Chair. Thank you for the question. We're still in the process of calculating this estimated liability. We're still working through the process, and I'm going to ask the Assistant Comptroller General to add some more detail here. But there are some specific criteria for when a liability needs to be captured, and based on, a contractual obligation or a legal or legislated standard. So, but in terms of the process and how that's working and the work that's been done so far, I'll ask the Assistant Comptroller General to give us a brief summary of that work. Thank you.
Go ahead, Assistant Comptroller General.
Thank you, Madam Chair. So as Ms. Muchin mentioned, we are in the process of estimating the actual impact to the government that this standard will have. We are looking at all assets, including the ones that you have mentioned, sewage lagoons, landfills as well. We're taking a very conservative approach in terms of what it would mean to estimate a closure of these landfills. Based on experience that we've had with one that we are in the process of actually remediating. So we're taking that approach and expanding it towards all the other assets that we have. As far as these are concerned, we're also looking at our buildings across the government environment, as well as any equipment that requires disposal. So it's pretty much very conclusive. Unfortunately, I don't have a number or an estimated number that I could give you today, but we do expect it to be significant, which is why the disclosure will be separate on the face of the financial statements. Thank you, Madam Chair.
MLA O'Reilly?
Thanks, Madam Chair. I just want to probe this Old Stanton project again. When I look at note 17 in the consolidated financial statements, there's a paragraph under the first table that talks about commercial leases, but it doesn't even disclose that this is with regard to the Old Stanton site. You know, I guess if you're in the know, you might figure that out eventually, but this is nowhere near as transparent as the note 13, where there's liabilities for other P3s laid out. I guess the information is probably there, but look, I'm not an accountant. So I just don't understand why we can't be more prescriptive in terms of how we identify these liabilities for the Old Stanton project and treat it as a P3 so that it receives a similar treatment as, you know, the Stanton Territorial Hospital, the Mackenzie Valley Fiber Link, Pleacho All Season Road. Can I get another explanation? Thanks, Madam Chair.
You, MLA O'Reilly. Ms. Muchin?
Oh, thank you, Madam Chair. The investment in the infrastructure will be included in our tangible capital asset schedule. This portion here is the lease arrangement, so they're separately disclosed. My understanding is that the infrastructure investment was approved through the capital main estimates process, and so that would have been seen there. So thank you, Madam Chair.
MLA O'Reilly, do you want to have a follow-up?
Thanks, Madam Chair. I think committee's going to have to figure out how you're going to deal with this one with a recommendation, I think. But I want to move on to the fiscal responsibility policy. Right in the, the consolidated financial statements, section 1, right at the very end, there's a statement that says the government is not compliant with the infrastructure financing section of the policy as the government was not able to generate cash from operating surplus. So we're not in compliance with the fiscal responsibility policy. And I'd like to know what the consequences of that are, if anything, from an accounting perspective. And then, yeah, I think, and that's all we can ask the folks that are here today, because they do the accounting. It's the Minister of Finance that's responsible for the policy and spending. So I know these folks are just the accountants, the bookkeepers, but when we're not in compliance with one of our own policies, that's very serious. Especially, look, I voted against the last capital budget because I felt that there's no way that we could actually get the money out the door and that we were spending too much on capital. But it's come back now. We're not in compliance. So what are the consequences of us not being in compliance with the policy? Thanks, Madam Chair.
Ms. Muchin?
Thank you, Madam Chair. In terms of accounting consequences, this reporting of the fiscal responsibility policy is based on the actuals that have been reported in the public accounts. And so I guess the short answer to that is that there aren't any accounting consequences. It would be a fiscal policy discussion. Thank you, Madam Chair.
Does the AOG have anything to add to that?
Madam Chair, so before I pass it on to Mr. Hogg to maybe give a bit more detail, we just want to highlight that it's important to consider what the objective of the policy is and assess if the policy is meeting, in fact, what's trying to be measured, what the objective of this is. If it's not meeting the objective, then of course consideration should be given for revision of the policy. If it is meeting the objective, then the government should take steps to comply. Mr. Hogg, I will let you maybe provide a bit more detail on this matter.
Go ahead.
Thank you, Madam Chair. Our observation on the fiscal responsibility policy, and specifically the infrastructure financing section of it, is that it excludes public-private partnerships, which do result in large capital expenditures. And also the way the policy is written, in a year where the government has an operating deficit, it's likely that the government will by default not be in compliance with the infrastructure financing section of the policy. And it is normal for governments to generate operating deficits from time to time. Our recommendation, as Sophie mentioned, is that we think it's important to consider what is the objective of the policy and whether complying with the policy or not reaches that objective. If not, we do think it would be worth considering whether a revision to the policy is required. And then alternatively, if the policy is determined to be good as is, that the government should take steps to comply with it, which might require scaling back capital expenditures in a year where a deficit is expected. Thank you.
You? MLA Zembler, do you have a question?
Yes, Madam Chair. My question is going to go to the NTHSSA in the information that we've been provided in this government, and what we do know on the NTHSSA is that it's just a growing deficit. Where either we've talked about this in committee of the whole, we've talked about this at our budget sessions. Are we underfunding it? Are we just overspending? And so what my question is what is being done? What is being done to assist the NTHSSA to control the spending, knowing that we've amalgamated all of these 6 regional health authorities into one so that we could save money, but it's just continuing to grow, and it's eating up our budget, and it's going more into our deficit. Thank you, Madam Chair.
Ms. Muchin?
Thank you, Madam Chair. What I'd like to talk about is the amalgamation of financial systems that occurred in January of 2020. And there was an amalgamation of financial systems onto one system within government. And so that's a role within my office, working with the NTHSSA, and that will increase the transparency and reliability of financial reporting. As far as the discussion around future, spending decisions and impact on future budgets, that is a fiscal policy discussion, and so I'll have to limit my discussion on that. Thank you, Madam Chair.
MLA Zembler, do you want to have a follow-up, please? We can't hear you. I think you're muted.
Sorry. Okay. Sorry. Yeah, and sorry. And so with this deficit, and it's being audited, and it is an issue. It is something that we've flagged as an assembly that is an ongoing problem. And I'm just wondering if the Attorney General has made any recommendations to help and assist from their audit, or know what's driving the deficit. Thank you.
Ms. Muchin?
Madam Chair, I believe the question was directed to the Office of the Auditor General, just for clarity. Thank you.
Auditor General?
Thank you, Madam Chair. There's no question this is a very complex issue. As you're aware, the Northwest Territories Health and Social Services Authority was the amalgamation of 6 former health boards, and they did have deficits before they were amalgamated. when we're talking about NTHSA, I do want to put a plug out there and say we are really happy with the assistance that the Comptroller General, Department of Finance did, because they provided additional assistance to ensure NTHSA actually met the reporting deadline with their extension this past year, which was an improvement from the year before. With regards to your question on the deficit, it is something that we have suggested that NTHSA work with the government in the past. As you can see, in 2020, the deficit was more than double the previous year, and it was significantly higher than their budget. We did make a recommendation to NTHSA to take a closer look at which of their programs are fully funded, which of their programs are unfunded, and which of the programs are partially funded, so they could have a better discussion as to are there some additional funding needed on certain programs, and are there some programs where there needs to be substantial reductions, because that deficit is quite significant and it has been growing. And as the Comptroller General mentioned, it was a complex year for NTHSA. They did move into the new Stanton Hospital. There's operational concerns with that. They did combine 6 different accounting systems into one, and of course they were dealing with some of the effects of the pandemic when that happened in March. But this is definitely an issue that I think the community should continue to monitor. Thank you.
Thank you. Are there any other questions? Emily Johnson?
Thank you, Madam Chair. I have a question for the Comptroller General about how we get the revenue figure for income tax. I note in here we now owe Canada $129 million because there was more income tax advanced, but I went back as far as I could in the public accounts, and every single year we owe them, millions and millions of dollars because the revenue projection is off. And so I get this is probably a bit of CRA accounting and they're giving us the figure, but can I just get an explanation on our end how we can go forward properly, put a proper revenue projection in our budget, because every single year we end up paying the federal government millions of dollars back because the projections are off. Thank you, Madam Chair.
Ms. Muchin?
Thank you, Madam Chair. Certainly, as there is new information related to revenues, we are including those in our forecasting. There is a timing, issue in terms of returns that are done and calculation of those figures, and that sometimes results in an adjustment. And so, as new information becomes available, we do update our forecasting appropriately. And I'll just ask the Assistant Comptroller General if she'd like to add anything to that. Thank you.
Thank you, Madam Chair. Just in addition to what the Comptroller General just mentioned, our office do receive some input in terms of what transpired in prior years, and that affects what we are able to record in current year and forecast. And based on the information that we have on a timely basis, we do make adjustments as long as it's reliable information. That in itself, because the revenue is affected by prior years' adjustments because of clawbacks or returns that corporations would have filed, that would then affect the revenues that they had forecasted or actually provided, and as a result would end up in the government having to repay those advances that the government of Canada would have provided at that point in time. Thank you, Madam Chair.
Thank you. Emily Cleveland?
Thank you very much, Madam Chair. Madam Chair, my question is in regards to claims and litigation, and I'm not asking for personal or private information about the details of the claims and litigation. However, I think it's important to notice that the claims and litigation for the GNWT has grown exponentially over the last few years, and there is concern about the lack of transparency as to what is driving that. And so I'd like to know from the Comptroller General if there's work being done within the Department of Finance to kind of theme or group what is driving the substantial increase to claims and litigation for the GNWT. Thank you.
Ms. Muchin?
Thank you, Madam Chair, and thank you for the question. The amount that is included in this note is not something that we have booked as a liability and an expenditure for at this point. This is simply claims that have been brought forward, and therefore we're disclosing, but the outcome is not determinable at this time, and that is why it is disclosed in the note as it is and not as a liability. In terms of grouping and themes, I'm not aware of any work in that regard. We work internally to prepare that estimate for the public accounts. Thank you, Madam Chair.
Thank you. A follow-up, Emily Cleveland?
Thank you, Madam Chair. I guess it's something that we'll have to bring back to the Minister of Finance because, and potentially also together with the Minister of Justice, because I think understanding what is driving that is really important to public dollars, and understanding what the GNWT can do in order to address that is really important. Thank you.
Ms. Muchin?
Thank you, Madam Chair. Thank you for that comment, and I'll take that back to the department. Thank you.
For clarity on that question of MLA Cleveland, I think she's asking for categories, or whether it's with illegal opinions with businesses, individuals, or I don't think she's asking for the actual disclosure of the cases or whatever is driving that amount up. But when we talk about categories, whether it's a business or businesses or those kind of categories, and then individuals, or I think that's what she was referring to, just for clarity.
Okay, sorry, Madam Chair. Sorry, I have my back to our colleagues behind us, so I apologize for that. But just on the, what are these, claims and litigation, can we actually get a list? And I understand that would have to be provided in confidence. I would just like to see a list of what these items are. And some of this is probably even publicly disclosed through court documents, actions against us. And if Comptroller General can't answer that, if we need to go to the Minister of Finance, I'm happy to, or I think we'll probably have to do that. But maybe I can just get a response from our friend, or the Comptroller General. Thanks, Madam Chair.
Ms. Muchin?
Thank you, Madam Chair. I'll have to take that back as a commitment to the department. Thank you.
Follow-up?
Thanks, Madam Chair. Yeah, the other information that we normally ask for is more detail on the contaminated sites. We usually get a table with some indication of what level of work has been done or liabilities associated with various sites and so on. Can the Comptroller General provide that information? Thanks, Madam Chair.
Ms. Muchin?
Thank you, Madam Chair. On the Department of Finance website, we do have a disclosure there of our environmental liabilities. However, I can take that back as a commitment to compare what the member's asking for to what we're disclosing on the website right now. Thank you, Madam Chair.
Thank you. MLA Zembler?
Nope, I don't have any other questions.
Okay, and Ron doesn't have any questions. Are there any other questions for the Office of the Auditor General? MLA Johnson?
Thank you, Madam Chair. So my understanding from the Comptroller General is that we are now reporting the P3 public accounting standards, and we've met them essentially how they're in here. Can I just get a clarification that that's correct? That nothing will change once that standard actually comes into force? We're actually in compliance with it now. Thank you.
Ms. Muchin?
Thank you, Madam Chair. My office did an analysis of the new standard that's coming into place, and we don't expect any significant impact on our financial statements. I'll just ask the Assistant Comptroller General to add any other details. Thank you.
Ms. Siobhan?
Thank you, Madam Chair. That is correct. We do not anticipate any other significant impacts on our financial statements with the addition of the new P3 standard. We have been analyzing using the guidelines that PSAB had issued in the past, and when we did a comparison with the guidelines with the upcoming standard, we found no changes, and therefore we do not anticipate any changes go forward. Thank you, Madam Chair.
Follow-up?
Yeah, thank you, Madam Chair. My other question is in regards to the other new public accounting standard regarding asset retirement obligations. Can I just get an explanation of, what happens when we add more liability to our books? I mean, this doesn't actually change any facts on the ground, but it requires us to now include more liability. I assume that liability doesn't go into our debt ceiling, but does it affect, our credit rating? Does it affect, how we finance money going forward? I'm just kind of trying to understand what having more liability on the books actually does in regards to real-world consequences. Thank you, Madam Chair.
Thank you, Madam Chair. I'm going to have the Assistant Comptroller General comment on that. Thank you.
Ms. Siobhan?
Thank you, Madam Chair. Actually, with this new standard, the other side of the entry is actually going to be hitting our assets. So like Ms. Muchin mentioned during the presentation, when we increase the liability that will be going towards the ARO, the asset value will increase as well. So then we have no impact on our bottom line as it pertains to expenses. At that point in time, everything will remain on the balance sheet section, which is pretty much an in and out, and so there'll be absolutely no impact at that point in time. As with any liability, it will be taken into consideration in terms of whether or not the debt has increased. It will be looked at in terms of whether or not how vulnerable we are and how sustainable we are. But with regards to an immediate impact on our bottom line, there will be no immediate impact once we recognize that liability. Thank you, Madam Chair.
Are there any other questions? Emily O'Reilly?
Thanks, Madam Chair. If I could ask our friends with the Auditor General's office about materiality. If they could talk about what the limit was for this audit. Thank you, Madam Chair.
Office of the Auditor General? Mr. Irving?
Thank you, Madam Chair. Materiality is a very important concept when we're doing the audit. We use it to help determine which samples we're selecting, determine which areas are more risky. It drives some of our procedures. In addition, when we're taking a look at materiality, there's more than just the quantitative number, but there's also a qualitative impact there. So, for example, when you have small errors, but would change a result from a profit to a deficit, or, for example, when we're taking a look at any potential fraud or sensitive items, when you're taking a look at compensation, we'd be looking at a lower amount. Now, for this past year, the 2020 public accounts, the materiality was $57 million, which is consistent with the year before. However, the amount that we use to report to management would be $2,850,000. So any amounts above that, we're tabulating that. We do examine the amounts below that, as I said, from a qualitative standpoint, and determine what we need to combine together or if there's any sensitive matters. I would like to ask if Ms. Miller would like to add anything further to this. Thank you.
Ms. Miller?
Yes, thank you. So in the general form, when we do apply the concept of materiality when planning, performing, and reporting our audit, we do assess what that amount should be at the beginning of our audit and also at the conclusion of the audit based on the actual results. And of course, materiality represents judgment on the degree of significance of a material misstatement or misstatements that could influence the decision of a knowledgeable user that's relying on financial statements. So in other words, it is the amount that would influence the users that we look to assess when we're determining materiality. Thank you, Madam Chair.
Thank you. A follow-up, Mr. O'Reilly?
Thanks, Madam Chair. Thanks for that. I understand that BDIC, the Business Development Investment Corporation, received a modified, sorry, I'm not going to get the wording right, a clean audit, that there was, if someone could explain that a little bit better and the reasons behind that. Thank you, Madam Chair.
Thank you, Madam Chair. I'll start and then ask my colleague if they have anything else to add, but the reason for this qualification was a result of COVID-19 and the inability to be able to travel for an inventory count. And so that is why that opinion was qualified. However, given the materiality of that inventory, it did not affect the overall opinion of the government of the Northwest Territories. Thank you, Madam Chair.
You're done? Okay. Mr. Irving or maybe Ms. Miller want to make a comment, please?
Thank you, Madam Chair. Yes, as the Comptroller General explained, when we're talking about the Northwest Territories Business Investment Corporation, this past year, due to the pandemic, the inventory accounts could not be attended. Now, it's important to understand when we're talking about the Northwest Territories Business Development Investment Corporation that they control several subsidiaries, and some of those subsidiaries do have goods that they do sell. For example, furs, pens, other items. So, from an audit perspective, generally speaking, we would rely on the component auditors that audit those individual subsidiaries, and then we would audit the consolidation process, audit the transactions of the Business Development Investment Corporation. So in this instance, the component auditors were not able to attend the inventory counts due to the pandemic. And when we had our discussions with management, we were unable to find any contractors, anyone else to attend. Now, that qualification will roll forward into the future year because the ending inventory will affect next year's opening inventory, and that can affect changes in the cost of goods sold in the new year. So I hope that addresses the concern, but thank you.
Okay. Emily Cleveland.
Thank you very much, Madam Chair. Madam Chair, I just wanted to go back to the page within the Section 1 Consolidated Financial Statements in regards to short-term loans and long-term debt. Our short-term loans grew substantially and our long-term debt actually came down. So I'm wondering if the Comptroller General can provide any context on the impact of short-term loans on the financial position of the GNWT. Thank you.
Ms. Muchin?
Thank you, Madam Chair. Yes, there was an increase in short-term loans as a result of operational needs. And so basically, the revenues that we brought in did not meet all the cash needs, and therefore an amount was required to be borrowed to meet those needs. Thank you, Madam Chair.
Thank you, Madam Chair. Yeah, I'm wondering if the Comptroller General has any information on the cost differential between choosing to put that into short-term loans versus long-term debt. So I guess maybe is kind of the question between our Visa and our line of credit, I guess, at the end of the day, and if that's an accurate assumption that it is costing us more money at the end of the day to take from short-term debt versus long-term debt, or short-term loans versus long-term debt. Thank you.
Ms. Muchin?
Thank you, Madam Chair. The borrowing needs of the government are done through the fiscal planning process, and really the result of that work is what you'll see in the summary of borrowing, an estimated borrowing capacity that's laid before the Legislative Assembly on an annual basis through the main estimates process. And so, for example, in 21-22, the main estimates has the short-term debt amount at $632 million. Thank you, Madam Chair.
Before we get to our next question, for clarity, I think one of the reasons of this whole increase is also the interest rates. The interest rates are quite high for short-term loans. I was wondering, personally, as an MLA and Chair, why are the interest rates so high for the short-term loan borrowing?
Thank you, Madam Chair. I'm going to have the Assistant Comptroller General provide an explanation. Thank you.
Okay, go ahead.
Thank you, Madam Chair. So the interest rates of the short-term borrowing they're pretty much negotiated at rates that we have agreed to. However, given also the environment with COVID-19 pandemic, following that fiscal year, 1920 fiscal year, you will see that the interest rates have actually declined significantly. And so the interest that we would have incurred in the last fiscal year have come down significantly. And just because as a matter of the environment that we are in right now. So while it was a little bit high on the high side because of the environment back in 1920, we have come under significant savings in the last fiscal year, and you will see that in the next fiscal year's report. Thank you, Madam Chair.
Okay, thanks for the clarity. You have one more question?
Thank you, Madam Chair. I guess this question's for the Auditor General's office. Previously, we had subsidized the Power Corporation that had changed the standard that they applied to under public accounting standards. Essentially brought them more into this less arm's length as a Crown Corp and more into a department of government. Can I just get an update on what happened in this audit with regards to the Northwest Territories Power Corporation and whether there's been any change in that? Thank you.
Thank you, Madam Chair. For this question, I'd like to refer to Ms. Dar, as she was the principal responsible for that audit and could explain it better. Thank you.
Go ahead.
Thank you, Madam Chair, and thank you for the question. Yes, in terms of the classification of the Northwest Territories Power and the hydro corporations, there has been no change. They're currently classified in accounting terms as other government organization, and as such, they follow Canadian public sector accounting standards. This is different from perhaps a different classification where they would be considered a government business enterprise, for which they would have an option, and they would follow international financial reporting standards instead. Thank you.
Do you want to do a follow-up, MLA Johnson?
Yeah, thank you, Madam Chair. Can I just get a bit more explanation of what the consequences of that from an accountant perspective are? I guess, I mean, the Hydro Corporation is $261 million in debt. They have very outdated assets that need replacement, and I think we in the territory have lots of concerns about their ability to, fund any future work and pay off their debt, which is what led to the subsidy in the first place. But, yeah, can I just get a little bit more explanation if what are the consequences of them being a government organization as opposed to a Crown Corp or a government business that would be self-funded from an accounting perspective? Thank you, Madam Chair.
Go ahead.
Thank you, Madam Chair. Yes, you've really articulated that well. So as a government organization, the Power Corporation and the Hydro Corporation is consolidated into the government's consolidated financial statements on a full consolidation basis, which means that all of the assets, all of the liabilities, the revenues and expenses are in essence added to the government's unconsolidated to form the consolidated. So if Hydro Corporation has a high or a different debt level from year to year, that all gets picked up on consolidation. In a government business enterprise situation where, as you described, it could be seen as a separate Crown Corporation, the consolidation is different. The consolidation would be picked up in a line item on a net basis, and from a simplified version, that would not have as large of an impact upon consolidation.
Okay, thank you. So one of the questions that I wanted to ask was to deal with if the government was found not to be in compliance with the infrastructure financing section of the policy. Does the OAG have any recommendations on how they would become compliant in the future? They were like $32 million under compliance. So I was just, I'd like to see what the OAG has to say on that. Maybe Mr. Irving, you can give me an explanation. Thank you.
Thanks, Madam Chair. For this question, I would like to refer to Ms. Miller.
Ms. Miller?
Thank you, Madam Chair. Similar to what we were discussing earlier in terms of the fiscal policy, I'll want Mr. Hogg to maybe present a bit more detail to the situation. But in what we mentioned earlier, the objective of the policy is very important in determining whether it's meeting what the government's trying to achieve. So maybe stop there, and I'll ask Mr. Hogg maybe again to go a bit more detail on this subject.
Go ahead, Mr. Hogg.
Thank you, Madam Chair. With respect to how to come into compliance, if the policy is kept the way it currently is, I think the key thing to do would be to project when a deficit or even a small surplus might be anticipated, and then to plan ahead and find a way to scale back capital expenditures in that particular year, such that the threshold of funding half your additions with operating surplus would be met. Thank you.
Are there either the Auditor General's office or the Comptroller General? MLA Johnson?
Thank you, Madam Chair. I just want to sneak one more in to the Auditor General and the audit of the Hydro Corporation. I guess this audit is not very good from as far as I can tell. One line that stands out to me is NT Hydro expects future bad debt expense to increase and the related cash receipts from some customers to decrease. There's also concerns the liquidity risk that NT Hydro will encounter difficulty in meeting its obligations associated with its financial liabilities. So Can I just get a bit of from a accounting perspective, overall, where is the NT Hydro Corporation in its ability to manage its future debt and ongoing costs? Thank you, Madam Chair.
Or for the Auditor General?
Thank you, Madam Chair. And thank you for the question. I believe the disclosure that MLA Johnson is reading from may be the COVID-19 or subsequent event note that was published in the Hydro Corporation's 2020 financial statement. So in that particular note, what management was wanting to articulate was a bit of a forecast of expected fluctuations in the Hydro Corporation's operations in the coming fiscal year. And they were forecasting, expectations about revenue, expenses, and bad debt, for example, as being some potential implications. So when we complete the audit for Hydro Corporation, we do consider issues like liquidity. Going concern is actually a concept that we discuss right in our auditor's report. And part of that is aligned to the question about its operations. So currently we do not note, and management has not noted, a going concern issue with the corporation. We do know that obviously in terms of its operations, it is managing its debt, it's managing its cash flow. And as per our previous conversation, we recognize that being another government organization, it's not at this time generating revenues and profits enough to be classified as a business enterprise. So I hope that addresses the question. Thank you.
Thank you. Are there any other questions? Bearing none, I'd like to thank everybody on behalf of the Standing Committee of Government Operations. I would like to thank you for joining us today and responding to the questions from committee. We have now completed this portion of the meeting, and I look forward to having a great summer, and I hope you guys all have a great summer, and hopefully someday we'd be able to meet some of the people in person at the AOG office. And thank you, Julie, for being here today with Siobhan, and have a great summer. Thank you.